Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Peloton and Lululemon announced a really big new partnership late on Wednesday, and interestingly enough, neither stock moved all that much throughout the day on Thursday. But I think this is one of those win-win scenarios for both companies. Peloton gets more distribution for its digital content, and Lululemon now has another partner for apparel and doesn't have to worry about the money-losing business that is digital content for them. So I want to go through what the details are and how to think about this as an investor, because it could really help both companies, even though the market doesn't think that today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And I want to thank this video sponsor, The Motley Fool. Check out fool.com/ASYM for the top 10 stocks to buy right now. Let's start by looking at the press release from Lululemon. And this is the release. There are a few components that I want to highlight. One, this is a 5-year strategic partnership between the two companies, and it includes exclusive digital fitness content provider from Peloton to Lululemon, and that Lululemon will be the primary athletic apparel partner of Peloton. Probably says primary because not every product that Peloton wants to make is made by Lululemon. So we don't know the details of the contract, but that's the way that I read that. The apparel side, I think, is pretty easy to understand. Peloton sells a lot of apparel. It's a lot of effort to both design that apparel, inventory it. So they're going to kind of offload some of that work to Lululemon, and that's a great partner for them, and they're going to be co-branded. I think that's pretty simple to understand and should be at least an incremental positive for both companies. But what I want to focus on today is the digital side. On November 1st, Lululemon Studio All Access members will get access to thousands of Peloton classes. And then the other piece of this is they are going to be discontinuing the mirror product. That's the bottom here. They're going to be discontinuing the mirror and also discontinuing the digital app only membership for mirror members. And those people are going to be pointed to Peloton's App One membership. So let's go through exactly what these memberships are for Lululemon. There's a few different tiers, but this is the one that is called out specifically. It's a $39 a month subscription. You get 10% off gear, 20% off partner studios. Those are in real life studios. So there's a number of different partnerships that they have. And this is where Peloton will come in, is 10,000 plus world-class workouts. Those will now be Peloton workouts. But I do want to caveat that this is a Lululemon membership, not a Peloton membership. So the data is going to stay with Lululemon from what we understand right now. This is a look at Peloton's membership and what's going to be included. This App One is the one that is going to be included for Lululemon members. So you get strength, cardio, Pilates, meditation, running, and more is what they say. It doesn't include some of the exclusive content that is included in the higher price $24 a month tier. So it's basically just a smaller bundle of content. Now, the reason this specifically is a big deal for Peloton is it's relatively fixed cost to create that content, to have the recording studio, to pay staff to actually do the class. Then what you need to do as Peloton is distribute that to as many people as possible. This is a typical digital content model. So something like a streaming service like Netflix, where you want to have something for everyone so that your subscriber base grows. And that's what really drives the economics of the business model. You're effectively a fitness content bundle. So Peloton's strategy over the last 6 months or so has really been, how can they focus on that app experience, not necessarily focus on the hardware equipment the way that they did a few years ago, where selling hardware was very profitable, and then they would tack on the software as a service on top of that. Now they're really trying to sell that hardware at a break-even level and potentially even look at hardware partners, and they want to focus on growing the app business. That means it's a much more asset light model, and it actually expands the potential opportunity. That's why you're seeing more and more content go into the system. A few years ago, it was really just a cycling business. Now you have, I think it's 18 different kinds of classes you can do on Peloton. So it's really something for everybody. And they call themselves, I believe it's digital fitness anywhere, anytime. And this really leans into that. So the business for Peloton really comes about, how can you distribute that content to as many people as possible? There are between 3 and 4 million subscribers within the Peloton ecosystem. Now you're starting to get access to the Lululemon ecosystem. We don't know exactly what the membership numbers are there, but 500,000. That's going to be an incremental positive because any revenue that they're getting from Lululemon as part of this deal is going to be very high incremental margin for Peloton. So really spreads those costs out across more and more people. I also think this might lay the groundwork for more and more partnerships in the future. I mentioned earlier that hardware isn't going to really be the focus of Peloton in the future. I don't think hardware is ultimately their moat. As they focus more and more on the app and on content, it makes sense to actually partner with a lot of other hardware companies. So think Nautilus and all of their brands that are underneath them. They have screens on those brands. Why not put something like Peloton content on those screens? They have rowing classes, they have strength classes, they have cycling classes. So now Nautilus could be a fitness hardware company and Peloton's becomes the fitness software company. I think that's really the path forward for Peloton because that's exactly what they're doing with Lululemon. Lululemon was losing money on the mirror business that they acquired, and they decided, hey, we're not making money on this hardware. We don't have enough subscribers to really support the software in a big way. So why don't we outsource this and partner with a company like Peloton that is going to have the content to really feed the needs of our customers? We get to have some incremental margin by adding value to these memberships that are not just about digital content. They're about people spending more money at stores, going to classes in real life. So it adds value to their bundle without having to build that piece of the business, that content business themselves. I think a lot of other companies are going to move in the same direction. That's why I think ultimately the digital fitness business is going to be a winner take all market. Whoever has the most subscribers is going to be able to offer the most content at the lowest price. And that's going to ultimately be something that other companies just can't compete with. We have already seen that with a lot of these other content companies losing money. Now, Peloton is currently still losing money, but they're at least on a path to positive free cash flow. That subscription business is doing extremely well, and they have more subscribers than anybody else. So they're really on the path to being the Netflix of fitness. I think that's really the way to think about this business. And so getting that product into more and more on Mormon, you get a little bit of value from getting access to those Peloton memberships, and you get another partner for your apparel. So I think this is one of the rare partnerships that's really a no-brainer. It's a win-win. Both companies are turning competitors into partners. And that's why I like this for both Peloton and Lululemon. At the end of the day, Peloton is the one with the most upside, partly because it's just down so much. Lululemon, this is more of an established company, profitable company, and this is an incremental value add. So not necessarily a game changer for them, but could be a game changer for Peloton. What did you think about this partnership, and what do you think about the future of Peloton and Lululemon? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.